Having a look here at the markets today, you can see the Dow Jones Industrial Average has left us with a textbook doji candlestick. It was down 1 point on the daily. Really, in the grand scheme of things, it's really just reflecting a little bit of indecision up here at this old resistance level. We've been paying attention to these macro resistance levels. The S&P in particular has broken out above that most recently as of Friday last week. Very similar type of candlestick today on the daily. It was up 15 cents, but again, very similar to that doji candlestick. If anything, it's what we call a spinning top, reflecting that indecision at this very, very important pivot point on the overall daily perspective of the markets. The Nasdaq today struggling to push high. It was down 1.4 points on the daily candlestick. Again, you can see that spinning top. So when we analyze these three markets, we are moving into a longer term, or at least an intermediate term bullish perspective, but we are also open to the expectation that the markets could move sideways, or they could retrace in a little bit of a controlled manner back into these exponential moving averages, which are now going to act as support for the market if it chooses to come down and retest these old resistance levels on the daily candlestick. The picture is going to look something like this. Now, again, on the daily, you can see this perfect doji candlestick at this resistance level. It hasn't broken above this old resistance in December, but again, if these old support levels hold, then it's just simply going to act as a trampoline. Price is going to bounce off from it. What is most important right now is that we hold these levels, especially on the Dow Jones and the S&P. We want to make sure that we stay above this 2075 level on the S&P. If that holds, then the markets will remain healthy, and we can expect some very nice higher highs moving forward into further into 2015. So when we look at some individual trades now, Apple is really struggling to move high. You can see the type of move which we had. 127 was a hypothetical continuation. Our original entry was down here at $120.96. We placed a stop here at 125 over the weekend in that pro analysis class. It's up to you whether you want to keep it at 125.35 or actually move it up to 126.73. You have the option. It's your decision. It's a very profitable trade, so just keep that in mind with what you choose to do. Amazon today pulled back down from that resistance level. We hit our target here at $381.71. You can see a quick little snap back to the downside. It's holding these upper levels. It's just going to consolidate between these two areas of support and resistance, and eventually we'll look for a nice directional break, but it's not really a go-to trade at the moment. Bar today was down $2.30, give or take. Nice candle on the daily. It's what we call a one black crow candlestick. Again, we're still running into a support level. It seems to be bouncing, or at least beating out a bottom in the way of the bar price. A good trade is going to come to us on this particular stock. It may come in the form of a Bollinger Band squeeze setting up, but at the moment there's no real immediate trade for bar moving forward. Baidu today has a nice bearish candlestick. Earnings gap down. It's rallied up. It's filled the gap going back to Wednesday last week, the gap between Wednesday and Thursday's earnings. And as of today, you can see that nice bearish candlestick. We don't have any ranges to play with Baidu at the moment, so it's one of those trades which will just simply sit tight on, and we'll look for a better entry moving forward. Caterpillar up 19 cents. We're still playing around with this resistance level. We're trying to fill the gap. It's looking quite healthy, but we're still in the face of a confirmed downtrend, and we're yet to break the swing high in late January 2015. FAS came very, very close to hitting our target. You can see here, or over the weekend, I said that I'd expect FAS to hit this on Tuesday or Wednesday this week. The high of today's candlestick was 127.41. it looks like 127.41, and our target was 127.65. so another 24 cents and we would have been out of this. That's okay. Just place your stop below this particular candlestick right here if you're in the trade, and just lock in that profit moving forward into Wednesday's trading session. Facebook today, a higher upper wick, a very nice upper wick. This looks as if, again, the momentum of Facebook is starting to roll over. There could be a new shorting opportunity come early next week. I'll keep you updated, but this particular candlestick right here does not sit well for people who are wanting to see higher prices in Facebook. Be careful. This is indicating at least selling pressure coming into Facebook. Google today had a pullback down $7.21. We had an original entry here at $547.30. Now, this is still acting the way which we expect it to. You can see we've been in some form of a downtrend. We've had a low here, we've had a second low here, and most recently we've set up our first higher low. We've got a very important pivot point coming through here, and generally what happens is when we break out of a trend reversal, we come back down, we retest the pivot point, and then we will bounce off from this level. So although on the daily it was down $7, we are down about $3 on the overall trade, $3 in the when you're looking at a $540 stock is next to nothing. The candlestick is indicating lower prices, but again, it's going to be a controlled pullback and the opportunity to re-enter into Google or to re-enter into calls moving forward. So I'll keep you updated with that Google trade. It's more or less the polar opposite to what's going on in Netflix at the moment, which is working out very, very nicely for us. So I'll move into GoPro. GoPro today had a little bit of fundamental data coming out, or at least the lockup expiration occurred today. A lot of people I know personally were looking to enter into this on the downside. It didn't happen, and you can see that we had an influx of buying volume. Again, a nice amount of buying volume on the daily candlestick, and you can see the pop to the upside, up about $5 on the daily. Now, although we've had the pop, although we have a small gap to the upside, it's not really a trade which I'm looking at placing at the moment. It's still in the face of a very strong downtrend. We're still making lower highs, right, and lower lows. We're yet to overcome any of the old swing highs. We're still yet to get above any of the exponential moving averages. What I expect for GoPro is that we're simply going to fizzle out here, may come up and retest this old resistance level. When we get to this pivot point, we're going to have a much clearer indication of what price is going to do for us. So sit tight on GoPro. It's a trade coming to us. Halliburton today had a nice candle on the daily. A bit of a, bit of a hangman, I guess, at a resistance level. Hypothetical entry here at 44.64. I told you I would not be placing this trade based on the fact that we have a resistance level here, and the price of oil is still in a confirmed downtrend. So you're really battling the trend. You've got a very nice target here at 47.03 if you did get into the trade. Again, this was a failed Bollinger Band breakout, which is quite interesting. It's starting to move in the direction which we expected it to back in late January. It's just been a little bit awkward. So if you're in this trade, set your stop below about $43.07, and we'll see what happens in this Halliburton continuation type of trade. Now here's the Netflix trade which we were triggered into last Friday. You can see here we had an entry at 464. We actually had another entry down here at 463, I believe. So you can see right now we're trading at 470. This is up somewhere between $5 and $7 depending on where you got into this Netflix trade. It's looking pretty good. Target up here is still 482.30. We've overcome this little swing higher over here. If you're on the trade, you've got a decision. Where do you place your stop? That's a question again that really you need to make the decision on. Looking at the two candlesticks, you're either going to place it below here, which will come in at 547, or you'll place it below the swing low on Tuesday's candlestick. It's your decision. At the moment, I'm going to bring up my stop, and I'm going to personally place it about 457.42 below Friday's candlestick over here. We have a nice lower wick, and it's still a nice risk profile on that overall Netflix trade. Moving into Tesla today, we had a little bounce up. I'm still paying attention to this declining trend line right here. I think the upside on this Tesla trade is limited until we find selling pressure at this downtrend. So pay attention to Tesla. And to conclude, we have Twitter. Twitter today has experienced a little bit of a pullback. It is what we call, a shooting star candle. Now, we were looking at entering into Twitter above the break of this particular candlestick over here. It is what we call the earnings gap, and we were looking for a gap and go type of trade. Now, we got filled on this on Friday last week, and again today we poked our head above it on the daily. You can see this upper wick on the shooting star candlestick, but we sold off from the highs of the candle. Now, again, this is what we call, or typically, an early reversal candlestick sign. Again, it doesn't really phase me all too much. I am confident in Twitter breaking and continuing to the upside. We may just have to sit through a little bit of a sideways movement on Twitter until we get the bullish breakout, and that is very reminiscent and similar to that of the overall markets. You can see we're still a long way away from the 10, the 20, and the 50 exponential moving average. So if you're in this Twitter trade, place your stop. I'd keep it at 46.79 still. I'm happy to keep it below Thursday's candlestick last week. If you put it below today's candle, as at Tuesday, there's a good chance that the price is at least going to come down a little bit tomorrow during Wednesday's trading session before we see the ultimate resolution, to the upside. So stay patient on Twitter. It's still a healthy trade setup, even though at the moment those those trades at the moment will be reflecting a negative position or a negative return. Still very optimistic and confident that Twitter is going to resolve itself to the upside. Just going to have to give it a little bit more time and wait for the market to really break out above the old swing highs and really get a really nice trend moving on all three of the US markets. So that's a really comprehensive Tuesday afternoon market recap. I hope you enjoyed it. Have a fantastic Tuesday evening. I'll see you most likely as at the close on Wednesday, if not potentially, I'd say a Thursday afternoon market recap. We'll just see what the markets are doing. And of course, I'll adjust these market updates to account for, the major moves taking place in the overall markets. All the best, traders. Have a great Tuesday evening. Goodbye.